You're watching Business Morning on Channels Television. A breaking news story at this time. Headline inflation for the month of February is out as released by the National Bureau of Statistics. And for the first time in 15 months, we see the headline inflation dropping to 17.78% year on year from 18.72% recorded in January. Now, the food index rose to 18.53%. from 17.82%, largely as a result of increase in prices of bread, cereals, fish, meat, basically everything that we consume every day. So we're hoping to get a sense of when will these prices begin to taper off when we talk to Opeyemi Oguntade, who is a senior economic research analyst with financial derivatives company, in just a bit. So talking about core inflation now, that dropped to 16% for the month of February from 17.9% recorded in January. And the urban index also came in at 18.57% as against 20.31% recorded in January. And for the rural index, that came in at 16.98% versus 17.34%. But as we talk about commodities now, it's important for us to focus on how soon we'll see the prices of some of this regular commodities consumed by Nigeria begin to taper off. And I'm hoping that Opeyemi Oguntade will have quite an interesting conversation with us on this matter. Opeyemi, it's good to have you on the show. Good morning.
Good morning, Harriet.
So, taking a look at today's inflation numbers from the National Bureau of Statistics, and food inflation has continued to rise, even though we're seeing the CPI tapering off a little bit.
Yes.
The question will be, why do we still seem to have food prices on an increase?
Well, okay, so if we're looking at, logistics and distribution costs, I think in the reports, I heard you reading it earlier on, we're still seeing an increase in the price of fuel and, lubricants and all that. And we know food, one of the factors that contribute to the prices of food is transportation costs. So you asked me, when are we going to see, prices of food items reduce? It's hugely dependent on when the prices of, all those fuel lubricants, which would contribute to transportation costs, when we see them taper off. I mean, if you look at what happened, and I know the reports on diesel isn't out yet, but in January we saw diesel prices moving from 196, average diesel price in the country, moving from 196 to about 270. That was a high in January. So, I mean, if this continues, this is definitely going to affect, transportation costs, and it will feed into food prices. Another thing to consider is that we know that this is essentially the planting season. We get into the harvest season sometime around, May, June. And obviously that will also contribute to the increase in prices. And you also have the forex issue as well. If you're talking about bread, we know that, we have to import wheat flour to produce flour to produce this bread. And we also have, we also have sugar there. So there are a lot of factors that, play into the prices of food commodities. And until when we see, these factors taper off, then we probably wouldn't see any, decline in food
Well, like you
inflation.
rightly just pointed out, we have a lot of imported commodities that feature very prominently in what we consume every day.
Yes.
So we're talking about bread, but fish. I remember that we had an issue where the Association of Indigenous Seafood Importers, the Seafood Association actually complained that there was a high influx of imported fish. And this fish, one, had health implications. It was really very bad.
Yeah.
And then secondly, it just wasn't promoting the local production of fish. And so we do not have the kind of variety that we would really like. But why can't we make do with what we have? Because we're talking about supporting and growing our economy.
Yes.
And they say charity begins at home. So why wouldn't we want to support and grow our local economy?
It's not just a problem that comes to the fish industry. It's a problem that is widespread in Nigeria. Nigerians or in general always prefer the imported content to those that produce domestically, and those that want to produce domestically do not even have the incentive, so to speak, because it's not it's not cheap to set up a plant or to set up a factory to start processing or rather producing some certain items. For fish now, you have to set up a poultry, you have to buy feed to feed this feed these fishes, and also the production process is costly. And when you look at the average lending rate in the financial system, it's about 23% or thereabout. It's not encouraging. I mean, if you're going to borrow money and then at the end of the day your returns, you're servicing your debt at about 23%. It's kind of, you rather, when you look at the cost you incur from importing from outside as opposed to producing it here, you weigh your cost, you do your cost benefit analysis, and you're more likely to import. So I think at the end of the day, it's not a problem that can be solved within a couple of days or within a couple of months. It's a gradual process, and hopefully with time we'll learn to appreciate that domestic production in the long run is way better off than importing these items.
But then taking a look at some of the burning economic issues that were highlighted in today's report by FTC. We're still talking about forex. We're still talking about the producers being able to readily access it. We have the Naira at 460 as of yesterday at the parallel market, and it actually fell at the interbank OTC to 306. That's the first time we've seen that shifting in a couple of... And then the Central Bank of Nigeria still continues to intervene in that segment of the market, and analysts expect that to continue.
Yeah, I think the CBN has proven to be resilient, and they've also proven to be dedicated or committed to stabilizing the Naira. So far, they have been, they've delivered on injecting dollars weekly into the markets, and we've seen that, from about 520 we saw sometime in February, we're about 460 now, and that's really good news. Obviously, we expect that if the CBN maintains this policy, then we should probably see an appreciation for that. But the issue here with the foreign exchange market is the unification of rates. If we do not see that spread between the official and the parallel market close-up, there's always going to be a cause for concern, and we're hoping that in the months that come, and the MPC meeting that is going to take place next week, we hope that this will be one of the considerations you'll take into account, together with the inflation numbers, the GDP numbers, to see how they can move the economy forward.
Talking about the economy, talking about rates now, maybe a tapering in the monetary policy rate, for instance, or maybe the CRR.
Yes, definitely. What we're hoping is that the monetary policy or the monetary policy committee move towards an accommodative stance. It's relative. It's between maintaining what they have and also maintaining status quo, moving to an accommodative stance, but we don't think they're going to tighten further based on the economic fundamentals.
So looking at domestic commodities and the prices, that is for elastic and inelastic, basically there's really no change, flattish.
It's been static for a couple of weeks now. We haven't seen any change, and that's relatively good news. But obviously, what we would prefer is for prices to come down, because purchasing power at this point is not exactly great, and human confidence is down as well. But we're hoping that in the coming weeks we should see a change in commodity prices.
All right, Okpeyemi, I'm going to ask you to stick around. We're still coming back and talking still commodities, but we're focusing primarily on the energy side of things. Because I know FDC just introduced one pager there on power generations, and it'd be good for us to talk a little bit more about it.